Welcome to TradeNBI.com. This is John. This report is for the 24th of March. And well, 4008, difficult. Well, in this case, we hit the 50% early on and faded back. And once it broke below back underneath that 4009-ish range, uh, it was back and forth and closed pretty close towards the even part of the bottom of it. MBI White still leads. A little bit of softening there. And interesting, the magenta coming back down didn't cross below the yellow. So bulls still holding on to a little bit, but difficult. So you've got really competing camps here that are really fighting it out at this particular stage. And there's just a lot of uncertainty with it. Shakeout is still continuing to rise. So from that standpoint, bulls still have a strong edge to this setup overall. And you can see that they were applying. It's just there's plenty of net sellers who would like a little bit of safety instead. And it's been a little bit of a problem. The real force has been the NASDAQ, and it tried to get back up and break into a new high. It wasn't able to do it right there and came back right in the middle of it. Both the collapse in shorts as well as in the MBI Magenta. Still just hanging around. It's slightly below Magenta, slightly below the yellow over here. The 32.94 is changing right now because obviously we're in post market, but um, it's problematic. You've got a rise in the DOC orange, and I think the Nasdaq is really going to set the tone for it. And so it kind of becomes the leader, so to speak. And again, this is that flight into treasuries, and as long as money just keeps ridiculously flowing into it, yield suffers a little bit. And a lot of people think that there's going to be more easing, and that means peak rates come in. It's not quite what the Fed is saying. I mean, they just increased again, this time a little bit more modest with a quarter point, and I think they're just going to wait and see. They've got time. I mean, they can just keep doing as long as unemployment numbers and things look reasonable and the economy hasn't really stopped. Uh, from their standpoint, they're on the right track, and the higher rates go, the more flexibility they have. A little bit later on, it's just difficult because you've got to solve the banking concerns that people have about the liquidity, and it's a legitimate issue because uh, they bought so many of these treasuries and things at lower yields, and it just creates a negative net for them given what rates are now, and the spread just keeps growing bigger. So any of them that kept holding on to those treasuries with the lower yields, they're suffering. Now they might be hoping that the Fed's going to flip around and ease, and they have time, depending on the maturity, to be okay at the end of it. But we'll see. Oil still holding on right in that mid range, just below 70. And again, the longer that can stay here and actually even a little bit lower, certainly would benefit the economy because it's just going to free up. Capital, and I've always said that energy, from that standpoint, you get it down and you can solve a lot of the issues uh, with inflation that really have plagued the market. And of course, gold suggested that it was going to continue to keep moving, and it will. There's just no question about it because, again, there's no question there's devaluation of the fiat currencies, and between that and your cryptocurrencies, the theoretic safe haven from those difficulties. The euro keeps pushing to new highs. Didn't quite finish above the previous close, but um, they're just driving that. They need to, the further they can get it as the eurozone starts to have more and more difficulties. Um, it literally will still give them the room to let it slide without having too much of a problem. And it's just an indication, I think, that the eurozone somehow is going to be magic and raise interest rates relative to where the Fed's going, and it's just not going to happen. But let them dream. Bitcoin, from its standpoint, again, pushing towards the higher, just like gold. So you get your mimic there. And I think it continues. Like we said, all the soft hands have been moved out of that arena. From a 50K standpoint, so we had the long push, got out of it a little late, but then flipped around to the short side and took advantage of that one on the return setup. And it looks like from a 50K standpoint, you're back below 25 with the magenta MBI and white leading. So, and then also you get that beautiful crossover here. So this is that spider that we'd be looking for on the daily, where the green crosses back below the cyan. Now you still have red rising, so that should be enough to keep things from getting ugly. But if that starts to roll over and you get a continued rise, you're definitely going to be pressured back down to that 0% here, which is down at 948. So it's a little bit of room. And it's still probably, even if you did that on a short-term basis, wouldn't affect the overall daily readings. Oops, one too far. Get that 5K back up. Hello, where'd my 5K go? Well, that's interesting. Uh, I was just looking at the 5K, and I mean, it was pretty sporadic overall. I don't know why when I minimize there and pop it back up, it just gives me a blank screen here. But it was fine just a minute ago. The strange things with TS. We caught some selling there towards the end of the day, and that's literally how we ended up with the finish, because early on was the straight up rise, and then it sort of flattened and then started to turn over and come down again. When it shows up again, I'll pop a chart onto the Skype chat. But that's the long and the short of it for now. Things are still, I would say, soft is the best way to do it. We're still caught in this range bound between that break even for the year and that 4009 range. And I think we're probably still going to play around with it, but definitely appears to be softer than maybe some were hoping. They thought that there'd be a lot of excitement with the Fed having to do something immediate, and it may be enough that they've just done their liquidity for the banking and hoping that that doesn't overstimulate. So it remains to be seen yet. As always, though, trade well. We'll talk again later. Have a good one.